If this number is above 75%, you have the green light for retiring. Last year, I helped a client go from this to this. And last summer, he called me and said, Jonathan, I highly recommend retirement, which is just a beautiful thing. So today, I'm going to give you free access to the same retirement planning software that I used to give him the green light to retire. By the end of this video, you're going to have a reliable answer about whether you can retire right now or not. Okay, so pretend for 60 seconds that you've already input your financials in here. And if you haven't, that's okay. If you give me 60 seconds, I'm going to show you how to do that. But once your information is in here, it's going to take you to this dashboard page. And here is your answer on whether or not you can retire when you want to, whether that's this year or whenever you desire, right here. If this number is above 75%, you have the green light for retiring. Now you might say, if I'm going to rely on this number, I'd like to know what it means and how it's calculated, and I'm going to address that for you now. This is a Monte Carlo simulation. What it's doing is looking at all of your information. It's projecting your retirement 1,000 different times. In some scenarios, it's optimistic. In some scenarios, it's pessimistic, whether that's to do with market returns or taxes, inflation, the whole thing. And it's giving a baseline expectation. I would reframe probability of success to what is the probability that I'm not going to have to adjust my spending at any point in retirement. So instead of probability of success, what's the chance that I don't have to adjust my spending ever? What I've found is that if we are at a 75% probability or higher, it's enough of a margin of safety that you're not going to have to adjust your spending. You've got the green light. One of the most common mistakes that I see is retirees trying to get this number to 100%. If you get it to 100%, all that does is guarantee that you're going to underspend what's available to you in retirement. For most folks I've met, that is of no interest. Now, what you're seeing on the left-hand side of your page is a simulation about what your investment assets are likely to look like over the course of your retirement. This thick blue line is a median expectation. The lighter blue shading around it is variance, positive or negative variance around that, depending on whether the market does especially well or especially poor. And the next question you might be asking yourself was, well, if I can retire now, how much more can I spend? And once you've got your information entered in this software, that becomes very easy to answer. I'm going to show you how fast. You toggle over to goals. Let's say we want to do some vacations right out of the gate. We want to spend $15,000 a year. We want to go on these vacations for the next 15 years. Can we afford that? Let's say we also want to buy a car in a few years for 50 grand. Can we afford that? Once that's entered, we're going to click back to dashboard and we have our answer. Yes, we can afford it. This software is super powerful in answering important questions, whether it's how soon I can retire, how much can I spend, how do I lower my tax bill, how do I fund long-term care, when do I take Social Security? It's ridiculous. All it requires is 10 minutes worth of your time on putting your information in there. So I have a free link to this software in the description. Does not cost you a dime. Go ahead and click on that. And here's what I would do next. I'm going to walk you through how to input your information into the software right now. Here's what I would do. Keep this video that you're watching on one device, like maybe it's your phone or iPad, and then use the link in the description to open the right capital planning software on your computer or your laptop. And then you can watch this video and pause it whenever you want. And you can just, together, we will input your information. And by the end, you will have your specific answer, and you will be able to tell your spouse tonight whether or not you can retire when you want to. That is an outcome I would love for you to have. So let's get going into data entry. As soon as you click on the link, you're going to arrive at this page. Just fill in your email, whatever password you want to use, your name. If you want to use a fake name, sure, does not matter. We're going to click create an account, and it's going to take us to the data entry screen. Each of these tiles can be edited, and we need to, whether We just need to fill in whatever's true for your situation. So by clicking on this first tile, I'm going to fill in my actual birthday. You don't need to make it your exact day, but the right month and year helps. Planning horizon is how long you expect to live just based on your family history and your personal health. And then make sure to fill in your actual state because that matters for state taxes inside your plan. You can do the same thing for your spouse. Hit next. Next thing it's asking about is your income. You're going to fill in your salary, whatever that amount may be. If you get annual raises, you can fill in that here. Doing the same thing for the misses. We're filling in Social Security. I would go ahead and click on based on Social Security statement value. Just look at ssa.gov under My Social Security and look at the value that it gives for full retirement age and fill that in here. Same thing for the misses. If you have any other sources of income, whether it's a pension or an oil royalty, whatever the case may be, rental income, you can add that in here. And if it's something that's not listed, you can always put it as other and then other income. And it's just going to ask you, how much income are you getting? When does it come and how is it taxed? This whole thing is like a giant cash flow word problem, but it's one that it's going to solve for us. We just need to tell it how to start. That's income. Next is savings. This is counterintuitive because it's not asking you how much savings you have. It's asking how much you're putting into your savings on an annual basis. If you're not saving, just skip this. If you're maxing out your 401k, you can put that in here. You can also just say what percentage you're contributing, whether that's 10%. And if your employer is matching, you can say, hey, they're matching at 4%, whatever the case may be. Same thing for the misses or your spouse. If you're maxing out your retirement accounts, but you're also putting money into a taxable brokerage account or a bank account as savings, you can put that in here. And this is an annual amount. We're already halfway done. This next page is asking you what assets and debts you have. There's two ways to input information here. One is you can do it manually by saying, like, for example, clicking on investment and adding a manual account. Like I have an IRA and it's worth $500,000, or maybe it's let's just call this a 401k. And then we're going to label it as a 401k and hit save. That's one way to add it. Another way is, this is just an option. You can link your account electronically and say, if I have my account at Fidelity or Schwab, I can just type in Schwab, click on this, and then I can plug in my account credentials and it's going to automatically upload all my information. This does not give me any trading access or withdrawal access, given that you're using Farnam software, or rather Farnam software that Farnam's providing. It just creates a viewing data connection. That's all. So you can do either one. Make sure that in terms of these assets, you only need to add what's relevant for your retirement. So if there's something that you don't plan on selling and using for retirement expenses, it doesn't need to go in here, whether that's the jewelry or your car, whatever the case may be. You can skip that. Just make it easy on yourself. If you own your home but don't plan on downsizing or selling it in the future, you can exclude it from the plan. If you have a home mortgage, that is worth entering in here. One thing that this software does is it separates insurance and loans like mortgages or car from other expenses. So still on this page, if you have a mortgage or car loan, make sure to enter it as a loan. If you have an insurance policy like home, not home, whole life, it's also worth entering into here. And then we're not going to enter your mortgage or your insurance as an expense. So now we're on expenses. Again, right here, we're not including mortgage or insurance, but what it's asking right now is how much we're going to spend each month before we retire. I'm just making up a number. If you're really into this, you can use this detailed worksheet and kind of itemize all these things. Otherwise, I'm a huge fan of keeping things simple, and you can go that route. If you're not married filing jointly, make sure that you actually notate your tax status in here. With that said, expenses are done. The last piece is just around goals. So goals are some outflow of cash that occurs in the future. So when it comes to retirement expenses, Right Capital is asking us, how much do you want to spend in retirement each month? I'm just making up a number. You can make this whatever is relevant for you. I do recommend when it comes to spending strategy, clicking this option called retirement spending stages. Long story short, this, in my professional opinion, this option more accurately represents how retirees spend over the course of their retirement, as opposed to spending going up every year with inflation. You can use whatever option you prefer. We do need to input your retirement age. So if, in this case, I'm 67 in this plan, but just put in whatever age you want to retire. And if that's this year, just put in your current age. You can also specify a specific month that you want to retire. This will matter for the outcome of your plan. So make sure you plug in what you want. You can always change it, especially if you plug in an age and you say, and it looks like you don't quite have enough. You'll notice if you kick out your retirement just a little, it makes a big difference, and vice versa. Right Capital is smart enough to project your healthcare expenses by itself. So again, these are going to be separate from your other expenses, but it'll look at both healthcare before retirement and after retirement. You can always change these depending on what's the case for you. LTC stands for long-term care. Once we reach the age of 65, we have about a 70% chance of having a long-term care event in our lifetime. There's a huge spectrum for what that looks like, ranging from I just need part-time help around the house to I'm moving into assisted living, all the way up to I'm in a nursing home and getting 24/7 care. Again, in my professional opinion, it makes sense to assume you're going to have some kind of long-term care event. That doesn't mean you need to buy long-term care insurance. That's a completely separate topic. But just knowing whether or not your portfolio can sustain that kind of expense is very valuable information. You'll find that this single event, long-term care, really does affect how soon you can retire, especially depending on how you fund it, whether it's from your portfolio, from an insurance policy, or it's from the equity in your home. By default, it will assume in-home care, that someone's coming to you to provide help. You can change this to assisted living, nursing home care. You can also, if you want to show, for example, you want to show that you move into assisted living, but that you also are going to have a nursing home stay, you can add that as a new goal. And nursing home care is completely crazy. Just make sure you fill in how much it's going to be for, when it starts, how long it lasts. Again, this is just like a giant cash flow word problem. Once that's entered, we are back to be able to click on dashboard, and you now have your answer on retirement. no, I put in crazy information, so this result makes no sense. But you will have your own answer on whether or not you can retire. So you're welcome to reach out. I'm glad to assist. And if you're curious about what steps you should be taking next before you retire, I would go ahead and click on this video that'll talk about the 6 things you should do before retiring in 2025 or 2026. Thanks so much for tuning into the channel. Again, I'm Jonathan Bird. I'm the founder of Farnam Financial, and we look forward to seeing you again next week. Take care.